fundamentals for direction and entries are technically driven. So what we have for last week was so unfortunate. The Moody ranking, rating, whatever, against the USD, the tax, fiscal policies, and all those is a problem for the dollar, because investors are looking at the dollar as okay, a very huge debt, at a very huge debt point, and it's not a valuable point on the dollar. So the reason why I was looking at longs on the dollar because of the CPI was good, but unfortunately the Moody rating and the Moody's rating and the fiscal tax affected the dollar. So for tomorrow, Sunday, we'll be having Powell's speech. Monday is not much of a serious day. We have BOJ CPI on Tuesday, but then we have the Aussie inflation data and NZD interest rate, which the market is pricing in the cut. And of course, we will be having the card GDP on Friday, and the CPI core PCE, which is the Fed's preferred measure. Already we understand that the dollar is now weak. We are in a risk curve environment currently. So if we are in a risk curve environment and the dollar is the weak one, of course the market would go, the investors would be driving themselves to the yen and the Swiss. With the yen, I think I saw their CPI information should be okay. That's the BOJ. So Tokyo CPI, there should be Tokyo CPI on Friday. We should have the Tokyo CPI. Oh yes, we should have. The market is pricing in 3.5%, so 1% increase from previous. Should it come out even at 3.4, that's still a huge one for the yen, and we'll be looking at yen strength. And for such reason, we could look at euro yen. Let's see how the euro yen is, which is not good for me. I don't prefer that. But what I'm really focused on this week is the pound NZD. Still focus on the pound strength, as we can see. So I'm expecting the market to push price higher on the pound yen. If we go to the 4 hours last week, the market did exactly what we expected. So last week, exactly what we expected. So currently I will be expecting this market to continue from here or grabs this points liquidity before going to the upside. So I'm still bullish on the pound NZD. That's what I'm looking out for. The pound USD, yes, I expected it to go higher, but the market surprised me. Anyway, so this should continue higher, but it's not my best of setups. The NZD JPY looks like one of the setups I could have. If you look at it from this point, this is a doji, previous candle is a doji. Looking at it from a daily time frame, there is no daily supply, so this liquidity, we might see this, or we see price head to this point. Monday, then Tuesday we see a drop. Those are the high probability setups I'm looking out for. And for USD JPY, yes, I was looking to long, but now I've changed my mind. I'm short because the market is in a risk curve environment. Also looking at it, this is a 3 months area. I was expecting a reaction, but I expected it to go higher. Unfortunately, I made a mistake in my technicals, but I have to look at it. Previous weekly candle is that, so we are looking at price coming to this area before we can short. That's what we are looking out for that. USD Swiss is the same thing. And then the Euro USD, yes, it's still bullish. Sorry, it's bullish to me now because I expect it to go higher. But the fact that I'm not trading Euro USD is because the Pound USD is a better fit for it. But if you want to go for that, you can. Sets we have is the US oil. US oil, a good one for longs. I'm expecting higher, a push higher. And gold, of course, is still a longs for me. Why is it bad? Gold is longs for me as we've been following it up. So push back to our H1 demand, and then we can long. So this was what I was actually looking out for. So I was expecting a break of structure on the lower time frame, but